what's really going on is this is a secular change in people's understanding of the world. And, people are waking up to the fact that, nothing will stop the fiscal train, as Lynn said.
Yeah, nothing stops this train. Yep.
Yeah, and as they wake up to that, they think to themselves, well, shoot, I've got to protect myself. Bitcoin was trending down in 2024 all through the year, and yet gold was trending up. And then gold broke out, and then Bitcoin waited a while, and then boom, it went even harder, right? So it's interesting to me this is taking place because I can guess, or I can see what I believe is the next move, which is, Bitcoin's about to go to 250.
Lawrence Lepard begins by stating what many mainstream economists refuse to admit. The inflationary threat has merely paused, not disappeared. Here's how he frames it. During COVID, the U.S. saw inflation spike to 9%. The Fed's aggressive tightening brought it down to roughly 2.9%. But Lepard argues this 2.9% reading isn't the end of inflation. It's the bottom of the cycle. In his view, once the Federal Reserve begins reaccommodating markets through rate cuts, balance sheet expansion, or stealth quantitative easing, inflation will reignite.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
My view is we've probably seen the bottom of this inflation cycle. In other words, COVID took us to 9, Powell tightened, we came back down to 2.9. I'll bet 2.9 is probably the low print, and that as soon as this accommodation starts, which could be as soon as this fall if something breaks, or it will certainly occur in May of next year, we're gonna enter another inflationary cycle. So that's kind of a long-winded big picture, but that kind of brings us up to where we are right now. And I know one of the things that's going on is a lot of Bitcoin maxis are like, hey, what the fuck? Gold and silver are really working. How come my thing's not moving yet? And I've got a great chart on that topic that just shows that basically Bitcoin has a lag to gold. Gold smells it first, and then Bitcoin moves harder. So that's coming. If you look at Bitcoin on a year-over-year basis, I think we're still up over 70 or 80%. I mean, that's pretty damn good. This last quarter, I think it was kind of flat compared to gold because gold took off. And both they trade together. They both represent sound money, and Bitcoin has traded much better than gold historically in terms of the amount that it moves. But they tend to trade together. And the thing that I think a lot of people are having a difficulty with, Julia, is that they're doing this price bias thing, and in a lot of assets this does make sense. You say, well, good God, the thing's gone up a lot in price. Surely it's going to correct, or surely it's overvalued now and will come back down. And that's not, generally speaking, there is some reversion to the mean on lots of financial assets when they get ahead of themselves. And there could be a little bit of that here. But I think more importantly, what's really going on is this is a secular change in people's understanding of the world. And, people are waking up to the fact that, nothing will stop the fiscal train, as Lynn said.
Yeah, nothing stops this train. Yep.
Yeah, and as they wake up to that, they think to themselves, well, shoot, I've got to protect myself. And, yes, some of us have, and some of us have been loud about it, but frankly, we're a minority. I was just writing my quarterly, some interesting statistics. U.S. total stock market cap is about $66 trillion, according to ChatGPT. The total value of all the publicly traded gold and silver miners in the world is 800 billion. So it's not even 1 billion, and we've got $66 billion market cap. I mean, hell, I think NVIDIA has almost a, $3 or $4 trillion market cap, $3 trillion market cap. So my point is that, everybody's on the AI stock market side of the boat, and they're not really, and they think that Powell was going to be able to bring inflation back under control. And I think that's the illusion that's being shattered. And as that illusion gets shattered, what I think happens is, kind of what we all in the monetary debasement trade call Gresham's law. And people say, well, okay, yeah, this money is fine. I'm making money, but how should I store it? And if they're in something that's melting, which is the dollar, They need to get into something that's not going to melt because they can't print them, and that's Bitcoin and gold and silver are the three alternatives. So, by the way, I'll just add parenthetically, I mean, the silver move was really exciting to me, and I'll tell you why. In precious metals bull markets, you don't really have a bull going on until the silver price starts to move. It comes later and moves faster. And the silver market's a dinky little market compared to the gold market. But when it moves, it really moves hard. And so, silver went from 35 to 52. I mean, it's up, almost 100%, not quite. And my sense is it's going to 60, 70, 80, 90, 100, not that far out. I mean, based on a lot of things like the silver to gold ratio and other ways of looking at it. And so, that to me, what that says is that we are really in the heart of this trade. And, people who say, well, yes, it's gone up a lot, therefore I'm too late. Well, yes and no. It would have been better to buy it a year ago, no doubt on all of these things. But in baseball terms, my partner and I, we talk about it. We kind of think, well, this is probably the fourth inning, the third inning. And let's be realistic. I mean, there will come a time when these things do get ahead of themselves. They do get overvalued. And there's something that blows up this trade, that makes this trade not work. And whenever I describe this, when people come into my fund, I say, they say, well, how could, if they're smart, they ask me, how can I lose money here, Larry? How does this not work? And there are a lot of ways. But one of the things I always say is, if the government gets responsible and starts to balance its books, and we stop printing money to pay for the deficits, well, that's going to make this trade not work. Bitcoin was trending down in 2024 all through the year, and yet gold was trending up. And then gold broke out, and then Bitcoin waited a while, and then boom, it went even harder, right? So it's interesting to me this is taking place because I can guess, or I can see what I believe is the next move, which is Bitcoin's about to go to 250. They shouldn't be fighting. We're all on the same team, which is sound money. There's a role for both. If you don't like the volatility and you don't want as much upside, fine, gold works. It'll protect you to some degree, but Bitcoin's going to crush it in terms of overall performance, as it has in the past. So anyway, that's kind of what I see out there, and it's very interesting times. I mean, we're gonna see if Jerome Powell makes it to the end of his term without having to do another pivot. He indicated yesterday he's probably going to cut another 25 bips again, which suggests to me that they can see that things are in trouble in the economy and otherwise. And with inflation at 2.9% headline and realistically a lot higher than that if you counted it honestly. I mean, I know everyone goes to the grocery store, and we all know that we're not at 2.9%. So it's going to be very interesting to watch this unfold over the next 6 months.
But Lepard's vision extends far beyond markets. He argues that this monetary awakening, led by the rise of decentralized money, could fundamentally transform society. Once governments lose their ability to endlessly print money, they also lose the power to finance perpetual wars and expand bureaucracy unchecked. He predicts that as individuals reclaim control over their savings and governments are forced into fiscal restraint, humanity will enter a new enlightened age. An era where the world looks back at our current financial system, the manipulation of interest rates, the creation of debt-based money, and the industrialization of war as primitive and barbaric.
If you take a look at what it means for the average person, it doesn't mean that much one way or the other. If you don't have a lot of assets, or your only asset is your house will hold its value in new terms because it's a place you can live. And, your mortgage will probably be easier to pay off because there'll been massive inflation. So, for the average person, say you're a plumber and your biggest asset's your house, you can still do plumbing services and you'll just get paid in Bitcoin on a go-forward basis. Mm-hmm. And, suddenly you'll have something that you can save in that won't be debased. The government won't be stealing 8% from you every year, which is kind of what's happened, for 50 odd years since we went off the gold standard in 1971. I mean, the government, the inflation numbers are cooked, but, the M2 numbers are not. And you can see that the government has more or less stolen 7 or 8% from all of us every year for the past 50 odd years. And that will no longer happen. And that's the implications of that, it's really hard to see the implications of that, how good they are. I mean, the other related thing that's going to happen that's going to be very, very good is how's the government going to pay for a war? I mean, these governments, look, the average person, Julia, I mean, do you want to go kill people? I know I don't. You know, I mean, go ask 100 Americans who wants to go to some foreign country and kill people. I mean, only the psychopaths are going to say they want to, right? And so, war is just going to become a thing of the past because no government's going to be able to afford war. Which is not to say there won't be crime, and also not to say there won't be psychopaths. There still will, and we'll need good government to enforce laws and order, so that we get the criminals among us, and prevent them from preying on the rest of us. But most of the world doesn't want to kill each other, and and yet we've still got nuclear armed countries and saber rattling amongst big powers, and I think that's all going to become, we're going to enter a new enlightened age. That's all going to become a thing of the past, in my view. People are going to look back at just how barbarian it all was. I mean, it'll be, our kids, our grandkids will look back and it'll be like, like you and I today, like they bled George Washington, right? They thought, he was dying, and they thought the right thing to do was to bleed him, that was a medical treatment at the time, right? And you and I look at that and say, God, that was fucking stupid, but they did it, right? And right now we're setting interest rates, and we feel like we got to have a big, strong defense, and we got to spend all this money on weapons and all that stuff. And people are going to look back and say, those people were primitive. They were archaic. I mean, we don't need to do that anymore. I think what the market is smelling or sniffing out is that in May, Powell's term ends. So he'll be gone with certainty, and Trump will appoint somebody new. And I think we can be, there's a very, very high level of certainty that new person will be somebody who is very monetarily accommodative, and we're going to see much lower interest rates. And frankly, we kind of have to, because the interest on the federal debt is now running at kind of a $1.2 trillion annualized rate. And we just recorded a federal deficit of $1.8 trillion. So big piece of that deficit's the interest. And if we can get the interest cost down, then the deficit will decrease. Now, the flip of that, though, is that taking the interest cost down, the only way to do that is to probably end up growing the Fed balance sheet, because when the rates go down, the bond market's going to revolt. And it's interesting, we even got another little clue on that yesterday when Powell said, that maybe the runoff of the Fed balance sheet, maybe it was time for that to end. And they'd already taken it down a lot. They'd taken it from, I think, 25 or 30 on the Treasury side down to 5, and they kept buying the MBSs. I think it's close to 30. But, there's signs, all the monetary plumbers, the smart people on Twitter who follow this stuff are saying there are a lot of signs indicating that they're running out of space, fiscal or balance sheet space, and that they're ultimately going to have to print. So I think, the big print to me feels kind of imminent. Hasn't really entirely happened yet, although there've been some signs of it. I mean, another thing that happened is Besant has been buying long treasuries. He's been issuing a lot of short-term treasury bills, and then he uses those proceeds to buy the long term. Well, that's kind of shadow QE or Operation Twist, whatever you want to call it. In fact, I tweeted this morning, there's another chart out that just showed that, actually the Fed has increased, even though their balance sheet has been shrinking on net, they've been shrinking the shorter piece, and they've increased their holdings of the longer piece. Again, all in an effort to keep long-term interest rates down, to keep inflation expectations contained.
Lepard closes his remarks by connecting the macro dots. Fed Chair Jerome Powell's term ends in May of next year. Whether he finishes it or not, Lepard says it's almost certain that his replacement, likely appointed under a new administration, will be monetarily accommodative. In other words, rate cuts are coming, and with them, another wave of liquidity and inflation. It's a structural inevitability. The only way to reduce the government's enormous interest burden is to push rates lower. But that, in turn, will force the Fed to expand its balance sheet once again, fueling the very inflation it claims to fight.